Hello, welcome to another Sunday night in Honolulu, and this is the Bitcoin Minute coming to you, hosted by Joseph Wagner. Before we dive into what happened this week, I wanted to clarify a few things I said last week, mainly about the wave count. And what I want to clarify is, if you look at this chart here, this is the wave count I was showing you guys, and I was noting how this is a wave 1, this is a wave 2, we may have entered 3, we may still be on 2, and such forth. But what I also need to mention is this is a short-term daily candlestick chart, and I forgot to mention that it doesn't even have to be a wave 2. This could end up being longer than this wave, and it could turn into a bearish wave count, such as is the case with the weekly chart, where we get a bearish wave count. In all fairness, if we were to actually have pricing that went all the way back to 2013, it would look a lot more bullish. Now back to our daily candlestick chart. If you remember from last week, I had put in a new Fibonacci retracement, and over this week I asked my mentor, my father, which seemed more correct, and he went with the one that I had been going with all along, so I'm going to listen to him. We're going to stick with our old retracement levels because it makes more sense. We also, during this week's articles, we're talking about a trend line. And let me put that trend line in for you guys real quick. This trend line right here. And we discussed how over key turning points in Bitcoin's trading history, this has acted as support, resistance, or pivot points. Such is the case, it starts at the lowest price in futures, acts as support for the first month, then resistance for about 3 months. And this is the day when finally strong bullish momentum. And even on that day, you'll notice pricing shot up above it and retraced to just below this trend line, meaning that there's some serious resistance that was right there. Now, the next day it opened right above that trend line, and that coincides with our major golden cross that has acted as support for the past 6 months plus. And we go over to our current pricing and see that it is still very relevant of a trend line to this day. And also, it intersects with our 0.618% retracement. And the funny thing about that is how we got this trend line. Now, let me explain. We got this trend line by extending this pattern from the auto wave feature, which this 6.1% represents that this point here is 61.8% of this entire move, meaning from here at its lowest point to its highest yearly point is roughly $11,000. If you were to multiply that by 0.618, you would get $6,822, and that is where this point comes in. Let me just put that trend line back in. Now, I think this trend line is very important because, and let me show you on a shorter term chart how many times it has dipped below it, come above it, and is just battling a tug of war to stay above this trend line. Now, this is a 60-minute candlestick chart, and as you can see, we had already previously just intraday, and really, as it looks like it, almost intra-hour dip below this line. And on Thursday, you can see we had this 1 hour where we had a big drop, roughly $1,000 move to the downside before slightly recovering. And for the rest of the week, we were trading underneath the 0.618% retracement represented by this horizontal line, as well as this trend line. And as you can see, to the start of Monday, overseas, we are trading once again over this line. So this is a battleground, and I think that this line right here could represent the direction Bitcoin pricing will move in over the next few months and even years. This has been Joseph Wagner. I hope you learned at least a little bit. We'll talk to you next week for another weekly update. Good night.